Welcome back, guys. Been a while. I didn't actually came to live or in front of my chart. So let me know that the sound is clear. I mean, you can hear me, and I will go for the discussion. Oh man, I'm feeling shy. Uh, so today's Thursday, but please let me know that voice is clear. I mean, you can hear me. It's the most important thing. I'll try my level best to do today's session, but for that I need to know that how to explain the thing today. We can hear you. Thank you, Emmanuel. How are you, brother? Welcome back. Welcome back. Thank you, Remedios. Hans, thank you. Hey, Hans, how are you, brother? Today's Thursday. We have a news at 8:30. Yep. So we have the news at 8:30 and 9:15. We didn't need to be worried about them because we are not going to take any entry at that time. I mean, before 9:30. Sound is okay. Thank you, brother. Let's go. Everything is perfect. Thank you only. Loader. Sounds good. Thank you. You can hear me. Thank you, brother. Thanks for welcoming me. Okay, let's go to the chart. Oh man, everything is very new to me. I mean, good evening. Thank you, Bloto. Good evening, brother. Declare status. An important interruption. Slide. You need to clarify whether you may or like non-purchase of subscriber is important of the registration and declare status. What the hell? Non-professional private is subscriber. Okay. Back to market. We have an offer actually for Black Friday. I would like to take that offer for trading view. Okay, I just came home. I mean, sometimes ago I came home. I didn't open the chart. I would like to see how is it. It's very new to me, guys. To be honest, it's very new. So you can see it has taken the buy side liquidity, market structure shift. This is the fair value gap. It's going to trade that fair value gap, then it will go lower. Oh man, I'm not looking like that way. I would like to see that it will go through this fair value gap. You see this fair value gap? It will go through that. This is from monthly chart, so I'm gonna keep this on. Also, we have very relatively equal low. If it go over there and then come back to the consequent encroachment to the breakaway gap, that can happen as well. But I don't want to see that. I want to see that it will go through this fair value gap. If it can go through this fair value gap, this relatively equal highs will be my target. I mean, market will go toward the buy side liquidity over here. Also the consequent encroachment, the weekly I fair value gap, everything will be traded. This is the time when I have to look how the dollar index will work. Okay, first time in your stream. Welcome, brother. Alien Alisha. Welcome, brother. Just let me move it little bit. Okay. Right now price is over here. Forget about this one. Okay, forget about the monthly fair value gap. Right now price is over here. This is the consequent encroachment of the daily fair value gap. I will go to the 15-minute chart and I will see the market how it is reacting over there. Okay, so this is the 15-minute chart. From the daily chart I came to the 15-minute chart. If I see price closed above the consequent encroachment, that is the sign for me that market will go higher. Okay, because it is not going to hold the price. This is going to go through this price, I mean fair value gap. That is why I would like to see market will go through this fair value gap, and I want to also see that price will close above the consequent encroachment. Look the fair value gap again. So this is the fair value gap. When price was coming from here, okay, it went up. This all the fair value gap. It came to this fair value gap. This is the first fair value gap. This is the second fair value gap. So price should come to this fair value gap. We should take our entry over there. Our stop loss will be below the breakaway gap constant encroachment. Target will be relatively equal highs. That should be our setup, right? Price went through this fair value gap. It can happen. I told you it can happen. Nobody can close below the constant encroachment of the breakaway gap. We can go little bit lower than the breakaway gap. This from the daily chart. We are not going to take entry over there. We are going to frame our bias from this here. I mean from this chart. I mean the daily chart. Okay, so price came here, tapped to the breakaway gap, went higher. Now two things can happen. It can came to this fair value gap. Look at this fair value gap. It can come over here. It can go and take the sell side liquidity, tap to the breakaway gap constant encroachment, then it can go higher. It can happen. Or it will go through this fair value gap, whole fair value gap. This candle's high, this candle low. So this is the fair value gap. It can go through this fair value gap. What should our expectation today? The continuation of the expansion. Yesterday was the expansion day. Brother, we got the expansion from Tuesday, right? No man, this is the CPI. This candle happened because of the CPI. We don't count the CPI run. Okay, we can't count the CPI run. It is not possible for us to count the CPI run as an expansion. But this is because of the CPI, and most of the time, 80 to 90% of the time, we see this type of big run from CPI. Yeah, from CPI. Okay, I really would like to see it will go through this daily fair value gap, and it will go at least to the consequent encroachment of the monthly fair value gap. I really would like to see that. I mean, like something like this. It will come over here. After that, we will think about next week. I mean, tomorrow, how it will react over there. We will see that tomorrow. But today, I really would like to see it will go at least to the consequent encroachment of the monthly fair value gap. If it started to go over there, we are not going to wait to come here somewhere. Okay, we will take a little portion of the run from Nasdaq because it is going higher, so Nasdaq will go lower. This is the rule. Okay, as I can see, this daily fair value gap is now working as an I fair value gap. If it works as I fair value gap, then it will come to the constant encroachment, then it will go lower, it will take the sell side liquidity. How do I know this fair value gap will hold the price? I will go to the 15-minute chart. Why 15-minute chart? After daily there is 1 hour, so I am going to skip one time frame to two time frame. So from daily I will go 15, I mean the 15-minute chart. Yeah, hourly chart you can also go over there. In that case you will skip the 4 hour. It is also valid. I mean it is valid as well. If you come over here to the hourly chart, we can see, I mean, very clean way market has closed above the consequent encroachment. So this is kind of sign market would like to go higher. Okay, it will go higher. I don't know, not 100%, but it is telling me that I am going higher. I'm not going lower because I already broke the consequent encroachment of this fair value gap. If I come to the 15-minute chart, it's more cleaner over here. You see the run above the consequent encroachment. Now brother, it went back again below the constant encroachment. That doesn't matter. Price was below the constant encroachment, so I'm not worried about that. I'm thinking market will go high because I saw this big run. I mean the candles over there. Okay, it has taken the sell side liquidity. It has given me the market structure shape. This is my fair value gap. Okay, so I would like to see it will tap to this fair value gap, then it will go higher. That is my expectation. We have a news at 8:30, so we can see some kind of volatility. I mean it can go through this fair value gap. Maybe it will tap to the order block. It can do that. Maybe it will go a little bit lower. Can do that because of the news at 8:30. But I want to see it will go higher. That is my thinking. You see this high, this high, they're related equal highs. Or if you just mark over here, all of these are related equal highs. It will go through this. It will come. Where is my monthly fair value gap? Okay, so here is my monthly fair value gap. I would like to say it will come until here, the consequent encroachment of the monthly fair value gap. Then where it will go, we will see that tomorrow. Okay, right now it should go higher. This is all about dollar index, but if it would like to go lower, it can't go above this high. This is daily fair value gap high. Okay, don't forget, this is the daily fair value gap high, and this is the monthly fair value gap low. It is inside the monthly fair value gap as well, and also the upper level of the daily fair value gap, I mean the daily fair value gap. Okay, so let's see how it reacts over there. Until now we are expecting market will go higher, so if it is going higher, all other market will go low. I'll go to Nasdaq. Domino, hey brother, how are you? Harian, thank you. You're most welcome, Alian. Ronald, hey. How are you, brother? How are you? Okay, so here is actually the Nasdaq chart. It came here. You see the leg. It is because of the news. This was the volume balance. If you were with me yesterday in my Twitter, I told you that this is the volume balance. Let's see price can hold. I mean, this volume balance can hold the price or not. So it's perfectly holding the price, but wick went above the volume balance. So brother, it didn't hold. No, obviously it hold. I see the body, I don't see the wick do damages. So I see the body. Did body closed above the volume balance? No, it went over there, but it closed below the let me just actually reset the account. So it went above, but it closed below the volume balance. My expectation is it will go lower. It will go through this fair value gap. Just a second. This candle low, this candle high. This is the daily fair value gap. I want to see it will go through this fair value gap. It will keep going lower. Retracement it can happen, but it will go lower. Then when it will be here at the breakaway gap, we will see how it react over there. But until then, my expectation is market will go low. When it will go a little bit lower, we will mark some specific space. Then we will expect some kind of retracement. That is different thing, but today I would like to see at least the lower run until the lower part of the daily fair value gap. This is the daily fair value gap. Okay, so price has taken all the buy side liquidity from here. This last fair value gap, the breakaway gap, this is the breakaway gap, you can say like that, or the last fair value gap, you can say that is as well. It actually hold the price. I would like to see it will go lower. Why I'm expecting it will go lower? The reason is, I know, I mean, when we did our monthly analysis at the first of this month, we know that from monthly chart our expectation is market will go lower. It's because the dollar will go higher. That is why I'm expecting lower run. Otherwise I would expect the higher run. I mean, it will go high and take the buy side liquidity from here, from here. Who the hell is this? Don't brother, don't do it. So that is the expectation right now. From higher time frame, our expectation is market will go lower. Then why we saw this big run? Why it went this much higher? Well, it actually went higher. It has taken all the buy side liquidity from there, and this was the last stage where price could hold. I mean, this volume balance, after this volume balance, this is the two level, but this one is the most obvious because this is the price swing. This is not a price swing, but this is the price swing. So this swing, this is the last fair value gap or the volume balance. It should hold the price. Otherwise, our expectation would be it will take the buy side liquidity from here, and then we would see some kind of higher run, something else. Okay, let's go to the 1 hour chart first. So I actually marked the 50% of this by my phone. It's very difficult, brother, to be honest, very difficult to analyze the market through the phone. Okay, so this all the last fair value gap. If you see, I mean, if you say this one last fair value gap, that will be better for me. Okay, because volume balance fair value gap, I will just it's very difficult for me to say the volume balance or the fair value gap. It can be, I mean, I can say volume last fair value gap. Okay, so you will know this is the volume balance actually. So this volume balance hold the price. Look at the bodies. Why did it close below the constant encroachment of the volume balance from hourly chart? Why from hourly chart? After daily there is 4 hour chart. So I actually skip one time frame. I went hourly chart. I love to actually go to the 15-minute chart. I really love that. If you come over here, you can see the price over here. This is the fake breakout. In my opinion, this is the fake breakout, and in that case you can say this volume balance actually hold the price. The constant encroachment body didn't close above the constant encroachment, but bro, it has closed over there. This is fake breakout. To be honest brother, this is fake breakout. That is my belief. And then when it came lower, it went back over here. I think actually I took an entry over here. I will go to the lower time frame and I will show it to you. Okay, so when it came here from higher time frame analysis, I was expecting price will go lower. I tweeted that let's see this volume balance can hold the price or not. So we saw, when we saw this fair value gap actually hold the price, so my expectation was it will go lower. Until when? Until, I mean, how long it will go? This constant encroachment was perfect. I mean, I didn't see any sell side liquidity over here, but as our bias is bearish, I really don't need the sell side liquidity for my bias. Okay, because market will go low. That is my bias. Because of what? Because of the higher time frame, we got the sell side liquidity over here. So many sell side liquidity over here. So that is the reason for bias. I don't need the clean sell side liquidity, but for entry, I need clean sell side liquidity, very clean sell side liquidity. So what was yesterday? Yesterday was Wednesday. Our expectation is the expansion, right? You see, this is the 8:30 candle. After 8:30, this was little retracement. It went lower, retracement, lower, retracement, lower, retracement, lower. It didn't actually take the buy side. I mean, it went lower, it went higher, take the buy side liquidity. No, it didn't do that. It went lower, it traded, I mean, retrace to this fair value gap. It went lower. It tried to retrace this fair value gap, failed. Instead of that, it went to the upper level of this fair value gap over there. Okay, it went there, it went lower, make that relatively equal lows. It went higher. Where did it go? To this fair value gap. It went there, it went lower again, take the sell side liquidity. It didn't make the buy side liquidity. Yeah, there was relatively equal highs, but it didn't take the buy side liquidity. Why? Because today is Wednesday, our expectation is market will go lower. This was the expense, I mean the manipulation. This is Tuesday's manipulation. Okay, no brother, why this is manipulation? You see the run from here to here, very big run, very big run. No, this candle is because of the CPI. This is because of CPI. So any news candle, we actually don't count that. This kind of uh what to say, I mean, when you will see some kind of big candle or big wick, we don't count them for analyzing the price. Try to understand the thing. Okay, we don't count them for our analyzing, price analyzing. Okay, so this is not expansion. This was the manipulation over here from Tuesday. After the big news, this it has some kind of equal highs or something, whatever it has made over there, then it has taken the buy side liquidity. This was the manipulation from Tuesday, and this is because of the news as well. 8:30, I think we had PPI or something, PMI, I don't remember. So this was because of that. It has taken the buy side liquidity again, and it started to go low. Our expectation is market will go lower. Now I told you in Wednesday you have to see the opening of this week and the constant encroachment of the last week. If you see prices above the both level, then market will go higher. Now look, this is the opening of this week. Okay, and this is the consequent encroachment. Okay, just I didn't mark the level. This is the consequent encroachment of the previous week. Where was price? Price was over there. So would you like to expect it will go higher more? Should you expect like that way? If price was just near the opening of this week, or very near to the, I mean from very near to these levels, then we can expect market will go higher. But market is already above here. This is weekly chart, okay? Don't get confused. So this is weekly chart. Market is already over here. So should you expect market will go more high? Your higher time frame analysis is telling you market will go lower. Everything is telling you market will go lower. I mean, just let me show you. From daily chart, you know this is the last volume balance. It is telling you that it should go low. So everything is telling you go lower. You can't take a decision depending on this theory, that the opening of this week and the consequent encroachment from the last week. Market is above both of those levels, so market will go higher. You can't take your decision like that way. This is kind of extra confirmation, okay? This is not the thing. As market is above this both level, that means market will go higher. No, not like that way. This is kind of extra confirmation, like the fair value gap. Market is over here, this fair value gap can hold the price. This is kind of extra confirmation. I have a level that is confirming me that market will hold over here and it will start to go lower. So this is kind of extra you can say the indicator. This is one kind of indicator, but you can't take your decision depending on one indicator, okay? I don't know guys, you are getting my point or not. You have to think like that way. Like if you are thinking market will go high, in that case you are thinking market will go high, maybe prices over here somewhere. You are thinking market will go high. Now this opening and the consequent encroachment from the last week, these both level are actually giving you more confirmation that brother, whatever you were thinking, you were right. Maybe we are also confirming you that market will go higher, but when market is already over here, you can't expect that market will go higher because it is above the both level. Let me know guys, it is clear to you or not, okay? Because I got some question to my Twitter about them. Why? Because market is already above the opening of this week and the consequent encroachment from the last week already above over there. So why are we expecting market will go lower? We should expect market will go higher. No, this is the price action. You have to understand everything. This normal fair value gap can't tell you that market will go lower. This volume imbalance can't tell you that market will go lower. This all of these things are kind of extra confirmation. When everything is telling you market will go lower, you will take your decision, okay? Let me know you guys are, I mean, yeah, confluences, right? You guys are getting the point or not, okay? Just let me know. Hey Amka, how are you brother? Nice to you. Thank you brother, thank you. Got it in late? Not late. I've just started, so nobody's late. Hey Obi, how are you brother? Yeah, PPI. Thank you brother. Today's yeah, we have a news at 8:30 and 9:15. I saw it already. PO3, yeah, Rahul, PO3, you can say like that way. PO3, yep, power of 3. So, as we see the expansion from yesterday, it was the lower run. My expectation is it will be the continuation of the expansion. That means it will go lower. It will go more low. In the meantime, what it can do, it can actually go little bit higher and take a little buy side liquidity from there by using the news. We will wait until 9:30. So before 9:30 we have two news at 8:30 and at 9:15. We will see if we see market is actually going higher, and at 9:30 it went little bit higher again. So that should be our Judas swing. Why? I'm expecting market will go low. That is my expectation. Try to understand the price brother. I'm going from very beginning, okay? I have just opened my chart in front of all of you guys. I didn't open my chart before that. Trust me. I'm just, you have to trust me. I swear by Allah, I didn't open my chart before coming live. I had time, okay, but I didn't study. I'm just started to see the market in front of you guys, and whatever I'm thinking, I'm just sharing with you guys. From Dollar index, I am expecting market will go higher. What can happen, I have already described over there. So when dollar is going higher, I am expecting the index, I mean the future index, it will go lower. You see the candles, it has closed below the consequent enforcement of this fair value gap. This is kind of confirmation. Okay, this is not, it has closed below the consequent enforcement, that means it will go low. No, it is the confluences, it is telling you that market can go low. This is not confirmation. Okay, now when I will think that market will go, if I see market went higher, take the buy side liquidity from here. This is 15-minute chart, guys. This is 15-minute chart. So it went higher, it has taken the buy side liquidity, maybe this buy side liquidity, everything has been taken over there. Market has already told me that I am going low. It went higher and take the buy side liquidity. When it will take the buy side liquidity, I will start to look for an entry from 1-minute chart after 9:30. Until 9:30, I am expecting a higher Judah swing. Okay, I mean market will go higher and it will take the buy side liquid. Now you see this fair value gap, just let me mark it. This is also a 15-minute fair value gap. Okay, over here. So this is also the 15-minute fair value gap. Brother, it has actually hold the price over there. Now shouldn't we expect that market will go low and it will tap over there and then it will go lower? Yeah, you can think like that. Where is your liquidity? Where is your sell side liquidity? Is there any sell side liquidity? Can you see, can you show me the sell side liquidity over here? I didn't see any sell side liquidity over here. So this is not valid. You can't take your decision like that way. Already market is very low. It has taken the sell side liquidity from here. You see this low and this low. Let me mark it. This low and this low, they are relatively equal low. So market actually made the relatively equal lows. It has taken this low, it has made the relatively equal lows. If price can go higher, take the buy side liquidity. Let me mark the buy side liquidity. Okay. So this is the buy side liquidity. Now if price can take the buy side liquidity, after that we will wait, market will give us some kind of very nice setup, sell setup. We will go for this sell side liquidity. Look at this sell side liquidity. Do you see this sell side liquidity? I can see this sell side liquidity very clean. This low, this low, this low, all of them are relatively equal lows. So it is very clean. Market never keep this type of clean sell side liquidity. Okay, now it can take this buy side liquidity or it can take this buy side liquidity as well. I mean it can go all over this area, though I don't want to see that this high will be taken. That is, I really don't want to see. I really don't want to see that. But market can go over there. Why market can go over there? Above this buy side liquidity, what do you have over here? Do you have any fair value gap or anything over there? I don't see anything over there. But above this high, do you see anything else? I can see something. I can see it. Do you see it or not? It's up to you. Okay, so there is a fair value gap. Also a order block. Yep, you can say order block, but I don't need order block. I can see a fair value gap over there. So market can go above this high. All of these things are relatively equal highs. Okay, no brother, it is very low from that low. I am agree with you. Then you mark this one. Above this highs, if you see a shallow run, okay, what do you mean by shallow run? What is shallow run? Just little bit higher, okay, and then it went lower. This is shallow run. If you see this type of shallow run, I don't need any fair value gap, any water block, nothing over here. I really don't need anything over there. I got this week, I will mark the consequent encroachment of that week. It will be easier for, I mean it is enough for me. Okay, if I see the shallow run, but if I see market little bit higher, okay, a body closed above the buy side liquidity, I will expect it will take this buy side liquidity and then it will come to this fair value gap, the last fair value gap. This is the last fair value gap, the breakaway gap. Don't forget about that breakaway gap. it will go over there. This breakaway gap will hold the price. When price will be over there, okay, what will I do? I will go to the 1 minute chart. So here is 1 minute chart. This is the fair value gap from 15-minute chart, okay. Don't forget. Brother, do you would like to see anybody won't close above the constant and costant? No, I don't want to see that. I want to see that this fair value gap will hold the price. That means nobody will close above this fair value gap. Nobody can close above this fair value gap. It can close above the constant and costant. Body can close above the constant and costant, but this fair value gap should hold the price. When I will see the fair value gap should hold the price, that means whole fair value gap, not the constant and costant. The whole fair value gap, I will expect, or I will accept the whole fair value gap. It will hold the price. Nobody can close above this constant and costant. Let me go to the 15-minute chart one more time. I'm making the thing very difficult, right? I know, brother. I'm not a good trader. I'm nothing, okay. Now when you will open your chart, what is your first thing you have to do? You have to mark the the relatively equal lows, relatively equal highs, everything you have to mark. This is your first job. If you can't mark anything like that, there is nothing to do, okay. Very important, brother. If you don't write it down, please don't forget it, okay. It's up to you. If you can remember it, I have no problem. Whenever you will open your chart, for setup, okay, you are now looking for maybe short setup. Maybe I'm looking for a buy setup. Just think, I'm looking for a buy setup now. First thing I have to do is I have to mark the buy side liquidity. Now you see this very clean buy side liquidity. Maybe if I go to the 1 minute chart, I will find some setup over here, okay. Just let me check actually. Yep, I can see. Let me show you, okay. It has taken the sell side liquidity. Just please don't push your button. We all are here to learn. This is my buy, the market structure shift over there, okay. This is the market structure shift. If you mark this one as your market structure shift, this is also valid, but I will mark this one because it looks better. It's look good, okay. So that is the thing. Now where is the fair value gap? This is your fair value gap. Mark your fair value gap. Don't push your button. I am just showing you the logic. If you don't would like to learn, it's up to you, but you can't take any entry or anything before 9:30. So this is the fair value gap. I would like to take an entry over there, maybe here, okay, and I put my stop loss maybe here, just for example. Where is my buy side liquidity? Here is my buy side liquidity. Now all of we know market will go here and it will take the buy side liquidity. Just see, it will very easily, it will take this buy side liquidity. That is my belief. This is my experience, you can say. This is my everything. Whatever I understand about the price, this is my thinking, that market can't go below this constant and costant. That is my belief. It can't go over there. Why? Because if it can go below this low, then that will be another market structure shift. After taking the buy side liquidity, it has given you the market structure shift low. Look at this low, it has traded this fair value gap. So that is my belief, that market will go high and it will at least take this buy side liquidity. This one I don't know, but it will at least take this buy side liquidity. What will I do? I will take my entry over there? Never. This is reading price action, guys. Try to understand. This is a setup. See, very clean setup. This is very clean setup. But if you take the entry over here, that is gambling. That is why, brother, why that is gambling? We can see very clean setup. It has taken sell side liquidity, is given in market structure shift, very nice fair value gap. We have very clean buy side liquidity. Everything is in perfect way. Then why this is a what did it call? Gambling. Why it is gambling? It is gambling because you have to read the price first. How do we read the price? Let me show you. Look over here. What price did? Price came from here. We are reading the price from daily chart. This last fair value gap hold the price. It went lower. At last, it has made this very clean sell side liquidity. Anybody has any confusion about this sell side liquidity? I don't have any confusion. This is very clean sell side liquidity. Now market is going higher. Why it is going higher? To take the buy side liquidity. Before 9:30 we are waiting to take some kind of buy side liquidity. Maybe after at 9:30 we will see some kind of Judas swing. Maybe it will trade this, I mean this volume, but fair value gap. Maybe, I am not sure. Then we will look for a sell. Why? You look this sell side liquidity. That is more confirmed. That is confirmed. I mean more obvious setup. That is, brother, but this is also obvious setup. No, this is not obvious setup. Why? Because this is before 9:30. Price can easily consolidate over there. It can go through, I mean it can come back again to the sell side liquidity, can make triple bottom, then it can go higher and take the buy side liquidity. Then why did you telling us that it is going to take that buy side liquidity? That is my experience. I see the price again and again. That is my experience. Okay, this is not, I don't know, actually I'm clear to you or not. Okay, this is how you will read the price. You have to find some setup. That setup you have to sacrifice to read the price. Okay, in one video ICT actually told he took some kind of entry. Okay, maybe one contract. He took one contract to understand the price. What is it doing actually? Okay, if he take profit, he doesn't care. If he take a loss, he doesn't care. What does it mean? That means reading price action is the meaning of the reading price action is you have to sacrifice some setup. When you will see price actually, like now price came here, it is going to take that buy side. When it will take that buy side liquidity, what does it mean? That means the way I am reading the price, it is correct. This time I was correct. This is the time when I am correct. Now it will take the buy side liquidity. Maybe it take the buy side liquidity, this one. It came over here. This is all your expectation and it is going to happen. After that, when it came here, what is your expectation? It is now the time to take the sell side liquidity. And you saw a very clean, very nice setup over there. Okay, you will take that sell over there. Why? Because now you are more confident. Price actually listened to you before. It listened to you perfectly over here. It should listen to me now. I took the entry. That doesn't mean it is not going to listen to me. It doesn't mean that. It should listen to me right now. It should go and take the sell side liquidity. Will you take your entry over there? Hold your trade until over there? No. You will be here in 1 minute chart. Maybe it will make some kind of sell side liquidity over here. Maybe, I'm not sure right now, but we'll see that later. Okay, I'll just remove this one because very disturbing. Maybe it will make some kind of very clean sell side liquidity over there, and you saw a very nice setup over there, sell setup. So you will take your entry over there. Your target will be that sell side liquidity. Maybe the sell side liquidity is over here. Maybe stop loss over there. So you will take your entry until over there. You will take your sell over there. You will be out from the trade from over there. You are not going to hold your trade until here. Why, brother? This is a very clean sell side liquidity. You know that it is going to take that sell side liquidity. Yeah, I know that. I know that it is going to take that sell side liquidity, but I don't know when it will come here. It will retrace and it will go higher again. It will clean the buy side liquidity. Then it will take the sell side. I really don't know that. So what I will do when I will see a setup, very clean sell side liquidity from 1 minute chart, I will take my entry over there. I will close my trade over there. I am already profitable. Now, if I see price actually went higher again, it has taken the buy side liquidity. Maybe very next a very clean setup over there. That is actually going to take the sell side liquidity. What will I do? I will take re-entry over there. Never do that. Yeah, you can do that, but when you will understand the everything, I mean the price action, when we will understand the price action, we will be pro at this type of things. Then we will take maybe 1 2 3 setup in one day. But before that, If you take a winning trade, just close your entry. I mean, close your chart. This is psychological issue. If you don't do it, and if you just take a loss after a winning trade, you will blow your account. If you don't believe me, just blow your account, then tell me. I got it. Thank you, Remigius. No, bro, you explain. Thank you only. If we take the sell side before 9:30, the setup is invalid then. There is no other sell side below. Yeah, there is no sell side below that sell side, but you have to expect something from the chart. You have to expect, as we are expecting the continuation of the expansion, because today is Thursday. So yesterday we had the lower run, so today is also we are expecting market will go low, and before going lower it should give us some setup. But if it went lower, take the sell side liquidity before taking the buy side liquidity. Okay, before taking this buy side liquidity, if it went lower, and take the sell side liquidity, we will look for a buy setup. We will look for a buy setup. Why? Because this is very clean buy side liquidity. But actually it doesn't happen in Wednesday and Thursday. It doesn't happen. Okay, most of the time, if it would like to go lower, it will make some kind of sell side liquidity. Before taking that sell side liquidity, it will go higher, and everyone is now thinking market will go high. Every single person who are the retail trader or someone, I mean, like them, they're thinking market will go higher. Market came to this level so many times, here, here, here. Every time market came here, market went higher. So everyone is thinking market will go higher. Their target is above this high. This is their target, this single high. Also lot of, I mean, they also target the single high. I don't target it, and I'm not telling you to target the single high is something not good. I'm not telling that. I don't target them. I'm just telling you I don't target them. I target some, I mean, assalamu alaikum. I target some kind of the relative equal highs, relative equal lows. That is my target. That is my thinking. That is my understanding of the price. Maybe it is not as same as you, so don't get me wrong. I love to mark the equal highs and equal lows, relatively equal highs, relatively equal lows. I don't believe in single highs, because if I would like to mark single high, there are a lot of single high. I don't know which high I should mark. I really don't know that. Which high I should mark? Bro, you can mark yesterday's high. You can mark London session high, maybe Asian range high. You can mark them. I saw a lot of times, so many times, market didn't take yesterday's high. It went over there, and it didn't clear the high, and then it retraced. I saw a lot of time it went to the PM session, very near to the PM session low or high. It didn't clear them, then it went lower. I saw that, but I never see this type of clean buy side liquidity or clean sell side liquidity. Market kept them like that way. I never see that until now. I never see that. That is why I really mark the buy side liquidity, sell side liquidity depending on equal highs, equal lows, not two. If it is more than twos, I love that more. Okay, so I'm very sorry. I mean, if you don't like it, you can skip it. So you see, guys, price came to this fair value gap. Yeah, it tried to consequent reach to the consequent encroachment, but it failed. Now it is a hindsight, right? I didn't tell you before the setup, but I am telling you now. You see this low? What is this low? This low has traded this fair value gap. Look at this fair value gap. It has taken this clean buy side liquidity. This high, this high. They're relatively equal highs. So it has taken the buy side liquidity. If market can go below this low, that means we got our market structure shift. That is the thing when price should take the sell side liquidity first. That is why I was telling you market shouldn't break this low. It should not break this low.